Good morning all, hope you're doing well. As you know, we had the CPI yesterday, and as we went into New York Open, the US yields really whipsawed like I hadn't really seen before going into New York Open. The 10-year was up, down, and I think it did it about 6-7 times as we went into the New York session. So because the yields were all over the shop, and they were bouncing all around because the CPI came in hotter than anticipated, and we had a bit of a sort of a strange day in the indices, but we had a big dump on the VIX. That was probably manipulated, I think, because that CPI came in hot, so they wanted to avoid fear and panic, so they dumped the VIX. I think the Fed have got some power on the VIX. I think they manipulate that, and so that kind of helped buoy the indices, but we didn't really do much. Like I say, we're sort of a bit wishy-washy really on yesterday, and because of that, we've got an okay score. It's okay. It could be a bit higher. We're above 50, so you could probably argue technically risk on, but we're sort of at 68, so it's okay. And for the sentiment is that we can see that they're net short, and they've added short over time. So there's nearly 10 people selling indices versus the one person buying. So it tells us lots of bears left in the casino, and they're quite happy to remain bearish. You know, they like to sell indices, and they'll get punished as we see quite often. So lots of green. So that's that's worth noting. But like I say, that CPI did cause a bit of mayhem with risk appetite, and we had a bit of a wishy-washy affair, and it might happen again with the PPI today, and the ECB we got as well, so we've got to remember that. NJ at the top and GA at the bottom. Now of note, we've got this new icons, we've got this new column, this midpoint column is new, and what it does, it just basically tells us that this is where the bears have got their break even for gold, and this is where the bulls have got their break even. So they want price below 1877, they want price to be above 1930. So if we do probe below 1877, it will just mean that the bears are getting paid, and that would be unusual. Because that would be unusual, we should see price go back within that range. So what I'm going to do, if we do really fall on gold and we probe that, I'm going to be a buyer, and I'm going to have a stop, you know, relatively safe stop, like 1870, maybe give it like $7, and then it will just allow them to profit ever so slightly. But of course, the way that the market is manipulated against the retail, they won't be allowed to profit for too long, and then we'll bounce off that level. So hopefully that makes sense, and this is the midpoint between the two. There's your short target, there's your long target. So EU 107.02, and the bulls want it above 109. That's a huge gap there. So the bulls are holding on, and the bears are holding on. And where are we for live price? 107.43. All right, so the bulls are undergoing a lot of drawdown on EU. Okay, they want it above 109. They've held on since. That's the retail guys for you. So let's go to the indices. And gold, if it'll allow me to click on that. Oh wow, that's slow. Load that across. Yeah, here we go. And double click, and so this would be fine, because what's happened with Dow is that they've gone long, and so we see price fall. So now we're going a bit sideways, but there was the sell ever so slightly. You can see the pixel difference there, and because of that we probably can fall. However, if they sell it, then we're going to be above that level, so you've got to be really careful with just sideways. We want to be seeing nice moves like this and see the reaction there, but if we're doing sideways stuff, we're not going to see a nice move. But you can see how that works. See the curvature of the MA and the SSI line cut through it, and we had that nice move. They sold it again. They sold it. Yeah, they sold it here. Boom. And they sold it again. So they're quite quick to sell, but we're just currently going sideways. S&P. And S&P was it tired me out yesterday. It really was. I was like, come on, you can go higher. You know, I think everyone knows it's going to go higher, but it just has to be doing that sort of theatrics. When I say everyone who's looking at sentiment will know it should be going higher. If you're not looking at sentiment, you probably don't have a clue if it should be going higher. But of course, we know that we're a buy at the big picture. We're 27% long, so we should be coming up higher because of the big picture. And if they sell it over time, it reinforces the big picture. So there's the big old demand here. Those are the wicks that tired me out. And I was like, come on, you can do it. And inevitably, it went higher, and I got out. It was okay profit. I could have probably held it, but because the chop was so ridiculous, I was quite happy to exit. And it might have been a good thing to exit because it looks like we're falling slightly sideways there. And if they continue to buy, which is what they have done ever so slightly, we're going to get the risky sell, and we're going to be back in that box. So it might have been a good time to exit, to be honest. And you've got to remember to stipulate your stop loss. So if your reward is 2 or 3 times what you're prepared to risk, just get out, because I did a trade on Monday of the dollar yen, 3-hour trade. What happened? It went all the way down to my break even. So I'm not going to let that happen again. Very frustrating. And even though it didn't cost me anything, it cost me time and energy, and that kind of sapped my energy. And so I think maybe it's a good thing to have got out of that long on the S&P, and then we can look potentially to buy again in this box, potentially. So be careful. And DAX, and we'll finish up with gold, and then we'll talk about the robot. The robot's done really well. I'm really happy. That's fine. Gold's fallen, so because of that. And if they continue to go long, it's going to continue to fall. And really, indices probably could be falling because of that CPI yesterday. Really, it came in hotter than anticipated. You know, really fundamentally a little bit ugly. And if they go long, you know, this is probably going to fall. So be careful there. We have the box. We can draw a box here, actually. Yeah, that's fine. Box is here. This one, yeah, it's this one than this one, but we'll draw this one, and then we can see how this is going to be a support going forward, because they'd sold it here. So, you know, retest, and we might have to see another retest there. So you could be looking to buy in that box potentially. And then lastly, gold. And gold looks a little bit heavier. I'll tell you why. And see, what happened is that they'd sold it, and price came up, but it didn't really go up to punish them too much. And see here, right, they see they'd sold it, and then we had that huge move from the CPI. Cool, crazy doji there. And so, you know, like I say, they'd sold it, but it didn't really go up to punish them, really. And now what's happening, they're going long. So we're going to have to probably fall. And we are now a sell at the big picture. We're above 50%. So if they continue to buy and add, we're going to fall. And you know where your target is. It's because it's based on the break even, the bear's break even. Okay. And then lastly, we'll talk about the robot. If it will load. And so with this current trades, we've got AN. So, you know, obviously we want that to do okay. However, our account history is very rosy and very green because we've got EA trades that really did us a lot of favour, and we're up very nicely. This is the best day we've had in a while using this new 2.1 logic where we're using the bubbles, and then we're fading that extreme move based on their stop losses. So that's how we're seeing this big move, and so potentially we'll see something similar on AN, but we'll have to wait and see. And then I'll wrap up the video now. And just remember to always know that you can approach me if you've got questions, anything at all, I won't mind, and then I'll reply back to you. But if you're in Discord, which you should be, at Quasi, so I can see the notification. So if you just put a question in there, it's very likely I'm not going to see the notification because, you know, I've muted the Discord server, which is, if you didn't, it would drive you bonkers. It would make you go a bit potty. So if you mute the Discord server, but if you put at Quasi, I will then get that notification. If you didn't mute it, you get like tons of notifications and stuff. So this is just the recent gold view. and I was then added, and now as you can see from this video that we've now flipped to sell at the big picture. We're now above 50%, and yeah, so above 1912, which are those arrows, you might be okay. So you could have a stop loss there, but I would be really careful. But that could be a theoretical stop loss. So remember to trade safely, and I'll speak to you guys soon.